Welcome back, you legends. I'm Dr. Cal. Let's get right into this video. So the stock market yesterday was up on all major indices, NASDAQ leading, Dow Jones lagging, like we used to see in risk on days. Taking a look at the different sectors, again, riskier sectors like cyclicals, communication services, and technology leading again, and the defensives like consumer defensive utilities and healthcare are lagging. This is what you want to see in a risk on move, and this is an absolute beautiful risk on move today. Taking a look at the S&P 500 map, we can clearly see again big cap tech, Google, Meta, Amazon, and semiconductors leading the market. This is what you want to see in a risk on move. Again, semiconductors leading even after Nvidia's horrible, terrible earnings report and horrible forecast for Q3. We're still seeing a lot of market participants buying off these levels despite the terrible earnings, and this is actually tends to be the hallmark of sectors bottoming. So this is, again, we've been talking about semiconductors bottoming for several months now. When I took a $100,000 position in AMD, almost capturing the bottom exactly on the dot, I bought at 77, and the stock literally bottomed the next day. So this is beautiful. This is what you want to see. You want to see semiconductors leading. Semiconductors have been the best performing sector in the entire stock market for the past about half a decade so far. And you want to see semiconductors lead when the market is moving up, because that's a very, very bullish sign. Jumping into the daily chart of the S&P 500, this market so far has been very easy to read. If you've been following this channel, you will have caught this top. You will have caught this move to the downside. You will have caught this reversal really before anybody else. And you will have caught this move to the upside. In fact, we made 60% profits on the way down. We caught this reversal very early before anybody else, really, because we were looking at the bond market, and the bond market, as always, is smarter than the stock market, and we saw that reversal before anybody else. We said that we will get a gap fill and a reversal. That's exactly what we got, and then we again caught this move to the upside, and so far made anywhere between 30 and 40% profits on this move to the upside, trading different stocks including AMD, Microsoft, Amazon, as well as trading the market itself, the S&P. Some members in the community actually made 90% on this move to the upside. So it really depends on how aggressively you structure your trades, on how much risk you want to take, but you could still make substantial profits without taking any undue risk. Now, if you guys are interested in following my trades, I do post every single trade and investment in real time in the Discord community, so you get access to all of that before anybody else. If you want to support me, it's $20 a month. That's the best way you could support me, and the best way to follow my trades in real time. The community has been growing at a rapid pace, and a lot of people have been making a lot of money. We've been on a beautiful, beautiful winning streak, so knock on wood, fingers crossed this streak continues. So I'm very thankful to everybody that's been supporting me on my journey. Now, let's go back to the daily chart. So what happens today? What is going to happen on Jackson Hole? That's the $1 million question. Interestingly, we do have wind at our faces, right? The PPO is still in bearish territory. That does not mean that we cannot see counter trend rallies. In fact, we did catch this counter trend rally and made a lot of money. This counter trend rally, in my opinion, still has a lot of legs left, right? We do have a gap right here at the top at $428, and the S&P, really we have this gap on all stocks, basically all big cap stocks like Google, Apple, Microsoft, you name it, as well as the NASDAQ. People are actually opening puts at the lows here. Unfortunately, a lot of retail traders were buying puts at the low as we hit the low. So it's really unfortunate to see people really getting chopped up in this market. It's really important to have your technical analysis on point to trade this tricky market. If you've been following this channel yesterday, you will have heard me say that we will probably see a beautiful, beautiful big bullish candle. That's exactly what we had. Prior to that, right here on Tuesday, I did say that a reversal was coming. We will see a tag of this gap and a move to the upside. Again, that's exactly what we've had. It doesn't always work like that, guys. The market is not always easy to read, but so far these moves in the last few weeks have been easy to read. Now we do have this obvious gap at 428. If we are going to fill this gap, it's likely going to be today. Why? Well, because we have a lot of implied volatility in the market. So the market is anticipating really big moves. In all likelihood, guys, Jerome Powell will come out with a nothing burger. If you've been following the Jackson Hole coverage yesterday, a lot of the Fed officials have been really saying nothing. They've not been saying anything substantial, nothing of substance. They're still delusional. They're still saying that we want to see a terminal rate of anywhere between 3.4% on the more dovish Fed committee members, and the most hawkish having a 4% handle by the end of the year, with CPI sitting at 8.5. This is dumb. This is just dumb. The Fed is just so late. The Fed has never, ever in the history of its creation has beaten inflation with the federal funds rate sitting below the CPI. They need to have the federal funds rate sitting above the CPI to beat inflation. We've never done it with interest rates below CPI. So it's really bizarre seeing these clowns really trying to reinvent the wheel and doing it backwards. It just makes no sense. It's like we're living in the Twilight Zone. But it makes a lot of sense when you understand the politics. The US has a massive, massive debt burden, and the Fed simply cannot raise interest rates enough to fight inflation effectively. That unfortunately will be political suicide, because at a 4% federal funds rate, the US government will need to spend 20% of its annual budget just servicing the debt. Just to service the debt, not to even pay it down. So you can imagine how horrible things will get if the Fed needs to raise interest rates to say 8.5 just to match current inflation. Nearly half of the US budget at that point will be needed just to service the debt. So the Fed simply cannot raise interest rates enough to fight inflation effectively, and unfortunately, because that would lead to a debt crisis, a global debt crisis. Now that we understand that the Fed's incompetence is basically on purpose, we can also plan for that by investing in inflationary assets like energy and so on. This is also why the stock market has been bullish since June. They've caught the Fed's bluff, and they simply do not think that the Fed will keep interest rates high enough for long enough to fight inflation. And as you all know, low interest rates are good, very good for the equities market. With all of that being said, really you can expect anything today, right? If the Fed comes out dovish or less hawkish than feared, we can easily see a massive move to the upside, filling this gap, catching a lot of bulls in a trap, and then completely reversing to the downside next week, really leading all of these bulls to slaughter by next week. So be very careful if you want to trade this move to the upside, which we will be doing that in the trading community. Be very tactical, take profits early, do not get too greedy, manage risk accordingly, and stop losses. Now let's take a look at the Qs. Again, we're getting very close to filling this gap right here. We have another gap right at the top at $329 on the NASDAQ. That would be a 3% move to the upside. This is atypical of the NASDAQ. This would represent a massive move to the upside, but we've seen really big moves to the upside before. We've had one right here, and we've had one right here, as well as here. So they are not common. But when we have a really big economic event like Jackson Hole today and a lot of economic data coming out, including PCE, you can expect really violent moves. Now, if PCE surprises to the upside, and I do not expect it to surprise to the upside, we can see just as strong of a move to the downside. but more likely than not, PCE will be coming down just like we saw with CPI earlier this month. Now let's take a look at the IWM. Again, we have this gap on the IWM at $199 all the way to $200. Again, the IWM, the Russell 2000, is way more volatile than the rest of the market. So again, we can expect really violent moves to either direction. Just be very careful. Today, a lot of money can be made today, and a lot of money can also be lost today. Make sure to be tactical, quick, and nimble. Taking a look at the HYG, this beauty right here is what alerted us to this reversal to the upside and allowed us to capture that 30 to 40% profits on the way up. Again, we have this gap right here at 77.73. And if the market continues to be risk on, we could easily see a gap fill today. Taking a look at the dollar index is flagging. We could see a breakdown that goes all the way down to touch the 9-day moving average, closing down there today with the market moving up today, and then a reversal to the upside for the dollar index and a reversal to the downside on the rest of the market next week. Taking a look at the VIX, again, a beautiful sell signal that we had here. Now, this sell signal year to date, guys, has been 100% accurate in catching tops and predicting massive sell-offs in the stock market every single time year to date. This signal has played beautifully for us. Now, in my last video, I do detail how you could spot this signal. It will save you a lot of money. It will help you avoid so much pain. Now, it is typical after we see the signal to see a pullback in volatility. We had that continuously over this last year. So an initial surge in volatility, then a pullback, a fake rally right here in the stock market, catching a lot of bulls and trapping them, and then we see that massive sell-off come later. So again, we could easily see volatility pull back all the way down to the 20.5 handle, allowing the stock market to move up, and then completely reversing next week and trapping all the bulls in a violent move to the downside. Again, we continue to see this bull flag. We had a break and a close above this wick just a couple of days earlier. So again, we're sitting at a critical resistance level. The yields are waiting for what Jerome Powell has to say. If we see a spike to the upside, expect the stock market to sell off. If we see a pullback in yields, expect the market to move up. Now, interestingly, even if we get a pullback to the 9-day EMA, that would not change the bullish uptrend in yields, and we could still see a reversal to the upside in yields by next week. Same thing here on the 10-year yield, guys. We're seeing the exact same thing. We had this beautiful bull flag, guys. If you've been following this channel, you will have heard me say again and again, expect a head and shoulders top, okay? Expect a head and shoulders top. That will probably come this week. This top can only be confirmed by a close below the 50-day moving average. This green line right here, we can still pull back. The bull flag will still be intact, and then we could perpetuate to the upside. Again, it depends entirely on what the Fed does, what Jerome Powell says, the inflation readings. So this is by no means a prediction. This is just a forecast based on the current economic data and the technical structure of the 10-year yield. We could see a head and shoulders formation, and that could mark the top in the yield. And we could still see a break to the upside in one last move to the upside. If we get a surprise CPI reading, a surprise PCE reading, or some major global geopolitical development that reignites inflation. Taking a look at Apple, again, we have this gap right here and another gap at $174. So we could see a fill of either gap today, really, if the market interprets whatever Jerome Powell says to be positive, to be dovish. We could still see that. But then again, guys, that does not change the overall bearish downtrend in the medium term. We could still see the PPO try to move back up, get rejected, right, as we make a double top on Apple. and the beginning of the next leg of selling. Taking a look at Tesla, Tesla has been chopping around for a while now. We've seen dips into this demand zone and buys off this demand zone. That is bullish. The split is now complete on Tesla. It is typical to see weakness right after the split. That is what happened yesterday. Price is contracting, and this could lead to a beautiful, beautiful breakout to the upside or even a break to the downside. Just play this very carefully, guys. If you manage your risk accordingly, if you have your stop losses and take profits planned out in advance, you can take advantage of this trade and make a decent profit. Just watch for a break to the downside, breaking this support line, or a breakout to the upside, breaking this resistance line that will allow Tesla to shoot up, possibly taking out this previous high and attempting to rally all the way up to touch this resistance line where we had several rejections in the past. So $350 is in play on Tesla. Taking a look at oil, again, oil continues to flag just like the 2 and 10 year yields. We had this beautiful double bottom. We had this significant divergence marking the bottom in oil. A lot of people have been calling for oil to go all the way down to $65. People I respect, really smart people in the trading community. I am not one of those people that believe that oil will go down to 65. I simply cannot see how that's possible with the oil supply being so tight. Even if they free Iranian oil supplies will still be tight. The Saudis could easily cut oil production to maintain these high prices. You have to remember, guys, that oil is a manipulated commodity, a globally manipulated commodity. A lot of interests rely on oil not going lower than the current levels. A lot of special interests really need oil to stay trading at these high levels. Taking a look at ExxonMobil, our favorite energy stock, the apple of energy. We did talk about this beautiful bull pennant. And we did catch this beautiful break to the upside right at the open at $96. The entire trading community managed to catch this move to the upside. And really, depending entirely on how you structured this trade, you could have made anywhere between 10, 20, 30, 40, 50, even 100% profits on this move to the upside. I'm still bullish on energy. We could easily see a gap fill of the $100 level on ExxonMobil, and on the more longer term, medium term, if we close just in the middle of this trading channel, into the close of the year, into January, we could see ExxonMobil close at $110 all the way to $130. I do want to point out seasonality, guys. We do tend to see this very significant sell-off towards the end of August into early September. So really the only thing that's still propping the market up is Jackson Hole, the anticipation of what's going to happen at Jackson Hole. And this event has all the hallmarks of a bull trap, so be very careful. Still a lot of selling is coming in September and in October. In midterm years, September and October tend to have the highest volatility out of the entire year. And as always, when volatility comes in, a lot of selling comes along with volatility. So what do we have today in terms of economic events? We have the PCE inflation figure, the preferred inflation measure by the Fed, and we have consumer spending and disposable incomes. And at 10 a.m., we have the manipulator-in-chief, Jerome Powell, speaking at Jackson Hole. We also have consumer sentiment and 5-year inflation expectations. So a lot of economic drops coming in today, a lot of market moving events coming in today. So do expect volatility, really violent volatility to either direction. Just be very careful not to get chopped up in this volatility. Now, let's take a look at the fear and greed. We're still in a neutral reading. We did not get back to a fear reading even after that sell-off on Monday. We did not manage to hit a fear reading just yet. Now, I've been talking about this for quite a while now, guys. I did say to expect us to top around 58 on the fear and greed reading, just simply off the fact that we've been making lower highs. And if you connect a resistance line, we should have topped maximally at 58 and we topped at 57. So we're still squarely in a bear market. We've been making lower highs on the greed reading. It is not atypical to see a surge back up in volatility. So for example, a double top or a lower top, just like what we had right here in January of this year. So we could still see a move back up as long as we do not make a higher high on greed. We would still be squarely in a bear market. Again, we talked about this 125-day moving average, a bounce off this level. We had that back here in April. We said to expect the same thing. Now watch for a double top, right? Watch for a rejection at the this gap fill level at 428. This will create a double top on the S&P. And I expect a lot of bears to come back in, especially because momentum is now in the bears' favor. Even after a violent move to the upside, we would still have wind in our faces because the momentum would still be bearish. And in fact, a lot of bears are waiting for this second test to go short. So bears would have been opening shorts here and they would have likely closed them down here. And at these levels, they will be looking to open more shorts. And this sell-off will probably very likely take out these lows to go all the way down to fill this gap at $390. Stock price breadth is now flattening at 0%, even though the market has been moving to the upside over the past couple of days. We're seeing price strength flattening. We're seeing breadth continue to weaken. We're seeing some uptick as we've been seeing buying off the last couple of days. Put to call ratio, we're seeing a dip again as we're seeing this counter trend rally in the market. And market volatility, again, we've been talking a lot about how to expect a pullback after volatility spikes for the first time after triggering that sell signal. This is very common. It happened here and here, as well as here and right over here. Safe haven demand. Now stocks are again outperforming bonds as we've been risk on yesterday and probably again today. Again, watch for a double top right here and watch for a higher low on the yield spread between the junk bonds and the investment grade bonds. Watch for a higher low. That would indicate again that we are squarely in a bear market and a sell-off is probably coming right after this counter trend rally is over. That's all I have for you today, guys. Thank you so much for watching and I'll catch you in the next one. Bye-bye.
Oh, wow.